Amazing. You're welcome. Felix is my name, and this training is actually meant for our student or mentees on PBS Club. This is day 26 of the phase 2 of the 90 days challenge. Usually, once you come into Plan B Express Cash Flow Solution Club, we have an academic section there that should put you through foundation and then mastery and expansion. So foundation, concept, all of those things defined first month. So anytime you come into the club, your first 90 days is your level of discipline to obey the instruction and follow through the academic section. However, you have your investment running, you have connected your account to uh, our copy system and all of that. Then, of course, you're working to understand basic. So your first month is every day. You set aside an hour. If it's midnight, create it. If it's an hour, you force through each of the courses from the beginning. Start from the candlestick, and it's not peculiar to one particular market. Trading is general. Then you have terms or operational, context at different markets, but it's the same pattern you use in trading in all the markets. Okay, so this training we just give it to people who subscribed for PBS SR Market Scanner, but you cannot have access to this PDF if you are not a member of PBS Club. So if you're a member of PBS Club, your back office is part of your 90 days challenge. And so what are we looking at? How to the time frame sequence and PBS S and R market scanner. There are terms in PBX you should need to know a few things. There are many of them. PBS means Plan B Express. Okay. TPE, triple phase engine, which is that three candles pattern for PBS entry model. All right. So that we'll look out for. So we're going to show that. RDP means, all right, range delivery protocol. That is S and R zones for trade direction. So it's on higher time frame. AOF mean areas of focus. It's actually an area when it's a point of interest. So we call it area of focus. So the region for looking for discount and premium entry. GSP, gear shift protocol. This is the moment the market transition from one directional state to another, popularly called market structure shift in ICT or change of structure uh, in SMC. So in the PBS institutional framework, timeframes are not just different views, they are different gears of the market engine. To be exceptional, so you must understand that the higher time frame, which is the HTF, is the boss, and the lower time frame, LTF, is the employee. So boss tell what employee should do. Okay, so 3 segments I've created. So we're not going to go too much here. So your operational activities, if you are using our scanner, so I'm going to go there. I'm in a trade now using the same procedure. It's not difficult. So you want to understand other things here. So you're going to be on PBS Club to have access to this document. So let's quickly look at the market. Just quickly look at the market. Now I have a trade running here. So I have a sell position before transition to buy position. So let me just remove anything called drawing. All right. So this is the chart when you subscribe to PBX. Now, the first rule says go to higher time frame. Perhaps start from daily. Okay. So start from daily. So we're going to go to daily. So I click on daily. Of course, I'm not going through either you have installed or not. If you have bought, you should have installed. Now on daily, it shows that the resistance is not too strong. So on daily, you have from different step to another step. So in it, you have market structure. So I'm not teaching you what market structure is all about, but you can always have that. Okay. So here you have different region of activities of things. Okay. Um, so now, if we have gone, that means this market has traveled from this wall to this wall, came back again, broke it, fake out, traveled down to this wall, got rejected, travel didn't hit down. So, but there are ways around it that you will learn to understand, this dimension as it were. All right. So now what we're going to do is, okay, we'll look at daily time frame. The candle seems bearish, though, right? Seems bearish but it was on a journey up here. So the basic routine is that, okay, I've seen the 1 hour, daily time frame. We're not bullish, right? We're not bullish to an extent. That means the journey may be truncated. So normally the best and suitable one is like probably when you open and you are from the wall, right? I call it the RPD wall. Are you at the bottom wall to look for a buy, or at the top wall, which is a ceiling wall, to look for sell? So there are different segments. But of course, there's some buy that can just take few hours, few days to complete. All right. So unlike this, took about how many days? 1, 2, 3, 4, 5, 6, 7, 8. So about 8 to 9 days for this to complete. Now, so what are you going to do? So ordinarily, I'm not teaching you practical kind of just to use your scanner. I'm not going to teach you mark this, mark this. No. So we have seen that, okay, the market still have some ways to go, though tired. And then what we're going to do is to go to 4 hours. So 4 hours and 1 hour do the magic. Now we're in 4 hours, which shows that, okay, the market only is pulling back. That's where you look at structure. So 4 hours, 1 hour are where you look at the structure. So it shows that the market actually pulled back. I traded this market down because your scanner gave you a sell. Now, so when I saw this signal, so the rule of the trading is, okay, this one's like a semi-wall because this is a pullback, all right? So minor thing sometimes, those of you who understand trading to an extent, minor thing sometimes we do is to look at the market movement from one place to the other. Okay, so you want to use like Fibonacci retracement to actually trade, but yours, don't bother. So if you have looked at the market, like when I sold from here, I was waiting for the market to get to this point so that I can take my profit. Or you can just set your take profit there. So when this one appear, so after now, this candle 4 hours that just appear, it's not long, that's about 1 hour ago. It appear bullish, right? So what end can I do? If it's 4 hours, this is 4 hours. You don't take the trade there because your scanner is going to tell you buy, right? But this is a continuation. You can see from where we bought from, and then before we break this one, this is like a breakout and a test now. So what am I supposed to do? It's very simple. Once the market have retested, because this is not the beginning of the beginning, because the beginning was here. That was February 12th. That was massive. The market traveled and then did over how many pips. So what you do, either the scanner had indicated entry at this higher time frame. So instead of dilly-dallying or struggling here and there, you can just go straight from that 4 hours to 15 minutes. What you are looking for at that 15 minutes is called quick and sniper entry. Now, why am I looking for quick and sniper entry? So that my stop loss can be minimized. My stop loss can be what? Can be minimized. So here, so you can do the 4 hour, 15 minutes, or you can do the 5 minutes, because sometimes if I don't find a proper refined entry, I will go to 5 minutes. So now, how do I avoid a fake signal, or to maintain a very high signal? If you go to our document, we said this is what we call TPE. Okay, that's triple phase engine. So triple phase engine means three candle combination. Now, which is still same as AMD. So this was an accumulation. So this is the one that manipulates and displays this candle. Then you have the third candle confirmation. It should be bullish. Not necessarily this too long. I don't even like this too long. It affects my taking profit or stop loss. So what I do, okay? So it's very simple. Now, so sometimes you could go to, I say you can go to, I say you can go to 5 minutes instead of 15 minutes. But 15 minutes has already given you, that is already a confirmed entry. Then you take your stop or your ruler to look for entry at the close of this candle. And then your stop loss, because you're a swing trader, you should give your market, this is too big, below this point. That's about 45 pips. Then you extend out before you go back to your 4 hours. That is one. Two, you can go to 5 minutes probably to find more confirmed. All right, so in 5 minutes, let's look at it. This was not a good signal. Okay, you know why? So this is the manipulation. We always say that all the candles should be healthy and have strong momentum. So this was not powerful, though what it created is called inside bar. You have an engulfing, that was good. So at the close of that candle, you are entering. Then if you go to 3 minutes, so the most powerful are similar. Okay, even 3 minutes too did not give the function, all right, properly. So if you look at this market, it's likely going to displaced. So because the scalper will have taken some money, so it's likely going to be displaced because this is how it's supposed to form. Yes, this is your proper A plus signal by PBX. So rather than doing that, did this. So that means the market will come to displace this. Nevertheless, so with such, you have to wait. Now, this is the perfect, most very perfect, the accumulation, the manipulation, and distribution, AMD. All right? But nevertheless, even because as a swing trader, you set your trade, put your stop loss, and then go. If you go to 1 minute, okay? Now, on 1 minute, yeah, on 1 minute was good. But of course, you know, it's a reversal trade. So on 1 minute, that was a very good one. And then you have found a trade here. So when you go to 1 minute, it helps you to actually have a very tiny stop loss. That's so very, very insignificant. You can see now it's getting rejected here. So meaning that, of course, it's going to have another thing to check is the market structure shift. How is it? A shift. So if you look at it, this is a break of structure, return down here. So this will be market structure shift, which we call GSP. So if you get that, then you want to pull back of the market and enter. So after that, you put your stop loss as it were. So you can see this was good, and then the other one was not too good. So once you have entered, like I said, okay, take care. So once you have entered, probably let's say you entered here, your stop loss go down. Okay. So how many stop loss do we have here? Okay, still 40 something pips. Just to give an allowance, I shall put it here to be like 36. Then you extend yours. All of these up here are barriers. Okay. So now you have set an entry. So you return back to 5 minutes so that you can adjust it properly. So we're adjusting it. So return back to 15 minutes. Okay. Then you can extend it to where the market was actually coming from. So if that is the case, look at it. That's more than 1:2 risk reward already. So you may want to adjust your stop loss to this extent. Okay. So that's about 45, 46 pips. Okay. Oh, so yes. Okay. So you have adjusted your stop loss, take profit up there, and you're okay. So what to do back is to return back to probably 1 hour. So when you come back to 1 hour, you may not see nothing. So you see 1 hour, point is the far off there. So you go back to your original time frame, which is the 4 hours, and then you expand. So you can now extend to the next wall. All right. So, but it's still battling, right? So sometime your stop loss may need to cover down here. That depends on what you use. That's about 66 pips. And then you allow it to run. That's all. Put your take profit, can take it up here or take it above here. So sometime when you put it that way and the market start reacting better, you are adjusting your stop loss and all of that. That's how to actually look at this market in a very simple format. You don't struggle with it. It's very simple, right? And that's how the trade takes place. So you take the instrument, you check daily, then, so sometimes some people just prefer to enter straight up. Why not? But I refine down so that I can have sniper entry. So you can see the same thing is playing out here. We traded this, we rejected here, and came back to the zone again severally. Look at it. Okay, went up, got here, rejected, and then got down, supported here. So it's a pullback, you wait for it to turn back here as much as possible. Okay, so that's how to take trade with this instrument. It's very simple. You don't bother yourself unnecessarily. Okay. And this one too is coming back. So if you wait for it to return back here, you look for a buy. And because it has a long way to go if you go on daily time frame. We've done that before even this trade. Pick some trade somewhere here and look at what it has done. Okay, so you have to just settle down, navigate through your daily time frame, your 4 hours, your 1 hour, and then probably 15 minutes to just find a sniper entry to reduce your stop loss impact. All right, so that's what it is. So it's very simple. I've said if you are in cash flows solution club, you have access to this so that you can study more. Very, very simple, and summarize your trade and then trade with ease. Don't give yourself stress. Don't need to be apathic while you are trading. You have traded and you are putting yourself under unnecessary pressure. It's not required. Don't add it as part of requirement to trade. Leverage on AI, let them do the dirty job. You now take the action, pull the trigger, and then continue to maximize the opportunity. Okay, so thank you very much. Every new person must go through this maybe again and again and again. You have a nice time and bye for now.